Today we continue looking at the investable attributes provided by the Darwinex platform. These are metrics that are based on a deep analysis of your own trading strategies with a view of both informing investors who are looking to invest capital in traders, but also to help the traders themselves identify weak points in their own strategies. If you're an experienced trader, you'll know that the management of risk within a trading strategy is far more important than the returns that you're likely to get. That's why so many of the investable attributes have some focus on risk, and why so much emphasis is put on the risk management engine that Darwinex provides. If you're already familiar with the investable attributes, you've probably already guessed that today I'm going to be looking at the risk adjustment metric. Let's take a look. Now I'm going to start looking at a trading strategy that scores very highly for this attribute. And by hovering over the risk adjustment icon that you see here, you can see it actually scores 10 out of 10. And to access the underlying metrics behind the attribute, you can simply click on this icon. But before I explain how this metric is calculated, you first need to understand the risk management algorithms within the Darwinex platform and why they exist. And the fundamental reason is, as I said before, the Darwinex platform allows investors to back traders with investment capital. And the trader then takes a percentage of any profit that those investors make. But the risk management algorithms provide a solution to the problem that all individual traders will have a different risk appetite. Some traders will be very aggressive with risk, and some will be much more conservative. And so to protect investors from that wide variance, the risk management algorithms standardize that risk across all strategies. So investors aren't putting their capital directly into the trader's strategy. Instead, they're putting it into a risk-adjusted derivative asset called the Darwin Asset Class. So each strategy that a trader has can be published as a Darwin, and that then makes it available for investment. And all Darwins are adjusted to have a 6.5% VAR, or value at risk. And that's regardless of what the value at risk of the underlying strategy is. So for very aggressive traders operating at a high VAR, their Darwins would be risk adjusted down. Whereas for very conservative traders who are operating on a very low VAR, theirs would be risk adjusted up, providing this 6.5 VAR across all Darwins. So now with that understanding, this metric will make a lot more sense. So each of the points on this bubble chart represent a position that was taken in the market. And along the x-axis you have the duration of that position, and on the y-axis the deleverage, which I'll talk about a little bit more in a moment. Now for each of the positions represented by green dots, as you can see as I hover over these, there wasn't a necessary risk adjustment above and beyond that required in order to standardise the 6.5% VAR. However, for those that show up in orange, these did require the risk engine to make an additional adjustment. However, the nature of these was such that it isn't considered to be bad practice by the trader. And so this doesn't detract from the score the trader earns for this investable attribute. But if any of these dots were showing as red, then this indicates there's a more severe level of risk adjustment that was required. So let's take a look at a strategy that exhibits this behaviour. So in the period of analysis here, there were 7 or 8 individual positions that required a more significant risk adjustment. And as you can see here, this particular one needed a 38% adjustment. And the fact that the risk engine had to intervene in this way means that the score reflects that, and in this example scores just 4.1 out of 10. And it's worth noting that just like the other investable attributes, the amount of data that's used to calculate these scores is again based on 12 D periods. And you can find out more about D periods either by watching my previous videos or searching for the term on the Darwinex platform. Now, I mentioned before that the y-axis was a measure of the D leverage. And this is a measure of the risk of an individual trading decision. And in order to come up with an assessment of that risk, it looks at what the volume of the position was compared to the current equity in the account. And obviously, the larger the volume compared to the equity, the higher the risk. But that's just the basic calculation. Because different assets exhibit different volatility levels, this of course means that trading one particular asset with a high volatility results in a higher risk than trading an asset with a lower volatility. And so this fact is also incorporated into the measure of that risk. Likewise, if you think of this from a portfolio management perspective, there'll be a higher level of risk on the account as a whole if an individual position is on an asset that's highly correlated to another asset for which there's also a position open at that time in the same account. So hopefully you're beginning to see the sophisticated nature of this particular attribute and how it goes about protecting investors from adverse risk decisions. Now, another point worthy of note is that the risk engine remains active throughout the whole duration of a position. So it's not just taking action when the position is opened, it continues to monitor the account, monitor other positions that are opening in the meantime, and continues to adjust risk throughout the entire life of those positions. All, of course, to achieve that 6.5% VAR on the Darwins based on these strategies. Now, what I hope that you're beginning to realize is the incredibly sophisticated nature of the metrics that are built into the Darwinex platform. And I hope you agree that they really do offer a unique insight into trading strategies that no other platform provides. And remember that you can take advantage of this at no cost to yourself. You can create a new trading account on the Darwinex platform or indeed link your existing trading account with another broker into the platform. Now, by clicking on the link that's highlighted right now, that will take you through to the platform where you can then click on the Sign Up button in order to start that process off. Now, be sure to tune in next time where we'll be looking at yet another investable attribute. And until then, trade safe.